Welcome into the Friday, July 5, 2024 installment of Market Plus. Chris Robinson, Ernie Goss back with us. We are recording this on Tuesday, ahead of the holiday, because, you know, Chris needs a break, Ernie. It's been a tough couple of weeks for him.
We're always on break.
We're always, academics, so I'm just lucky he picked up the phone.
Right.
Dr. Goss, let's go back to this housing discussion. We were chatting between programs here. There's this insurance issue that's impacting the coast, specifically Florida, California, about companies. It's happening in Iowa. It's going to happen in other states. Are there different factors involved with housing, or is all housing the same when it comes to ups and downs?
No, it's absolutely local, but a lot of the locals are being affected by the same thing. For a new home buyer right now, you're going to have to pay 40 to 45% of your income just to pay off make your monthly payments. In addition to that, you've got rising insurance costs, significant rising insurance costs. You've got taxes, property taxes, which have gone up significantly. And finally, you've got maintenance costs, which have gone up significantly. So it's very difficult for a new home buyer or a buyer that's in a house that's got an old mortgage, 3 to 3.5%, to move into that new house and move to a new job. Or, you know, you're having people probably, I don't have this down, but people getting divorced and deciding to stay in the same house because they can't, neither one can afford to move to another house.
And that happens. Housing was a big part of the 08, 09 issues, and housing continues to be a story just because of the economic things that it drives. I mean, I think we've had growth in new home or in existing home sales, but it's been slow. And I want to get to tariffs now for a minute, if we could. Does the election have an impact on the economy this time differently or more than other times?
I think it does in this case, but both are talking about that. The two primary principal candidates are talking about raising tariffs, trade restrictions. Again, those don't, from an economist standpoint, don't make sense, particularly for the two industries that we survey at Creighton University. That would be manufacturing and agriculture. Not good. That's certainly one of the big issues looking forward. Secondly, you're talking about both candidates, the chief candidates, are talking about spending more. I mean, they disguise it somewhat, but they're talking about spending more. One would increase the debt significantly, and the other would increase taxes. In other words, President Biden has talked about throwing out some of the 2017 Trump tax cuts, December of 2017. Trump's talked about keeping them all in addition to more tax cuts. So we're talking about, both of them are talking about blowing up the deficit more than it already is. So that's going to put pressure on the Federal Reserve back to, I talked about reducing interest rates. That's in the short to intermediate term. Long term, we're talking about higher interest rates in looking ahead for a long time.
Chris, I asked you on the main program about interest rates and commodities, but what about elections on commodities? What's the impact there?
Well, I think you've seen it. China has been sitting on their hands because they're, as far as being aggressive buying especially our new crop soybeans. New crop soybean exports are at 19-year lows. You know, we grow 4 billion bushels, roughly 1 billion of that usually goes to China. So we're feeling that now, and I think that they're going to fold their arms. They're not in a good situation at home anyhow. They've got their own domestic problems, their own economic problems with their real estate system. And I think that they're going to wait and see. So they're doing one of these. We're waiting, and they don't know who's going to be president either. So I think that's one of the reasons we haven't had really strong exports.
But there was a report early in the week that said China may have finally dipped their toe back into buying. I think that's old crop, though.
Old crop, I mean, yeah, 3-year lows brings out everybody. When we see wheat drop $1.80 in a month, you see corn drop. Basically, we lost 84 cents in a month. You see soybeans drop $1.20, and we are at 3-year lows. Anybody who in May was worried about what if prices go higher, now they're like, whoa, they just got, it's a blue light special. So you're going to see people come in and buy some. Is it going to be enough? I don't know. Those numbers we talked about, the carryout, close to 3 billion bushels of corn. There's, I think, 456 million bushels of beans, which is about 140 million bushels we had more than at this time last year. So, again, those beans and corn, that's got to get moved before we can start going higher.
We'll get to the stock question in a moment, but I want to start with the holiday and the 4th. Craig in Minnesota wants to know, Chris, do you see any grain market fireworks in the weeks ahead?
There's always the big what if. Now that we're into the July 4th weekend and we don't have a heat dome, we've gotten plenty of rain. Rain makes grain. Now, for the areas that have gotten too much, obviously, that's going to be a problem. But right now, for the next 15 days, we don't have weather stress, so there's no weather risk priced in, and that's why you see prices sitting where they're at currently.
Well, you also bring up a point of east versus west here. Mark in Nebraska wants to know, from the western side of the Corn Belt's perspective, on-farm corn seems to be more of an eastern problem. Do you agree or disagree with that? And what does that mean for the market going forward then?
All basis is local. I mean, I'm lucky enough to work with guys all over the country. Everybody has to make their own basis decisions. You have to keep track of that. The only thing we can hedge is flat price. And it's not surprising to see the basis move when, again, flat price moves down to 3-year lows, because that elevator, he needs to make some concessions to get you to go, sweep out your bins. So, of course, the basis is going to get better. But that can change very quickly, because as soon as they have what they need, it can go away very quickly. So if you see an opportunity, take it.
We have 2 in Ohio. And Terry is the first one that I want to ask you about. Does a basis contract get counted as farmer-stored grain when in reality the grain was delivered and processed in some cases months ago?
No, if it's already been sold and priced, it does not count. So
okay. Then the other question from Brock in Ohio, why is farmers storing the grain looked at as such a bad thing versus commercials storing it?
Well, commercials are in the business of storing grain. And I always work with customers, and I always say, you are an elevator, but do you really want to be an elevator? You're an elevator because you're long all the grain you have now and all the grain you're going to grow for the rest of your life. But if you're going to be competing with elevators, they're probably going to have the edge on you. And there's an old axiom in the business that the market doesn't turn until the last farmer kind of throws the towel in. And that's typical. If you don't have to sell it, you probably won't. There are a lot of guys I'm working with currently that are being forced to sell now because for one reason or another, somebody won't let them roll it into the next month. So you're going to see more and more of that. And especially now that the cat's out of the bag with the numbers of that, with all that on-farm storage, it kind of gives the elevator a little bit more of an edge to the farmer, because the elevator's in the business to do that. Most farmers aren't.
Ernie, as you look at or hear what Chris is saying, does that change anything? Do you think in those survey months ahead, more than, say, the Federal Reserve cutting interest rates, any of these, the amount of grain in the field, the amount of acres not planted, how do you see the two mixing?
Well, they obviously have strong connections. And the connection in some cases is just the interest rate in the overall economy and the global economy, and tariffs, again, back to that. But one thing I failed to mention early on, and fairly significant to this program, I think, is we recorded 53 straight months of growing agricultural land prices, farmland prices, I should say. And in addition to seeing weakness in residential real estate, we're now seeing, after 53 straight months, 2 months in a row, where it's moved sideways a bit down. So not only are we seeing weakness there, we're also seeing it here. And look at farm income for 2024, USDA's number, and our number as well. Well, we don't have a number. We just say the direction is down for income 2024 versus 2023 versus 2022. So that means, again, the market, I see weakness in, I shouldn't call it weakness, but growth is not there in terms of farmland prices. And I think we're going to see it coming down, but not like we're seeing residential housing come down. Those are going to be fairly dramatic. We're going to see that soon. Look no further than the employment report for the month of June, which is released on Friday. That's very important.
I'm going to take away the easy answer for this question, but in the last 6 months, the biggest story besides the Federal Reserve's action is?
In the last 6 months,
in the last 6 months of 24, what do you see?
I think the issue is going to be the stock market coming down between now and September the 18th, and interest rate cuts and the overall economy showing that we're in a recession. I think that's going to be the big story. But again, we economists, that's the National Bureau of Economic Research, we designate the recession. We don't do it till sometime in 2025 when it's of no value to the individuals, businesses, and farmers as well. And farmers are a little bit contrarian, thank goodness, in terms of recessions. It's not going to be as tough a recession on the farm as it is on non-farm.
Chris, what do you see as the biggest story in the last 6 months of 2024 as we wrap up the year?
The next 6 months is are we going to hold $4 corn and $11 beans? I mean, that's a big revenue bump there, and people are concerned about sub $4 corn, and that's, I think, the big what if here. And again, real quick, look out to 2025 and 2026. They're both at $4.50 for corn. Look out to 2025 and 2026 beans. They're both at $11. So these are going to be key pivotal areas for it to hold. And what I don't want to see is us go back to where we were 2014 to 2019, where we had kind of sideways lower prices, and that's not a good environment for the American farmer.
You're saying without saying, you're not quite jumping on the table. However, we are at a time and a place where we have the opportunity to put something on the books right now that we quickly saw disappeared. You're saying this is a good chance right now, because if we have above trend line yields that everybody thinks who's trading is possible, we're going to have a lot of grain to sort through, right?
Absolutely, and the market does not care what your cost of production is. It's brutal. It's a brutal fact of life. And you know, back in 2014 to 2019, everybody needed 430 corn. You can go back there and look and see. Sometimes we were there for 2 days during a marketing year, and then it didn't last. So, and when I was here the last time, I said this was going to be a year of the spreadsheet. You had to know where your number was. And this has been a difficult marketing year because we haven't had very many chances. And that Dees corn, it got so close to $5 there, $4.96 just a month ago. And that's the big psychological. Now the key is, again, moving forward, you say, what's the big risk? We don't want to have corn with a 3 in front of it. We don't want to have beans with a 9 in front of it.
I'd like to say that's a good positive note to end on, but it's nowhere close. So, Chris, we'll just leave it at that. Chris Robinson, good to see you. Thank you so very much.
Thanks.
Dr. Goss, as always, thank you,
Thank
sir.
you, Paul. Thanks, Chris. Yeah. Good to see you.
See you.
All right, that'll do it for Market Plus. Next week, we are going to revisit our producer farmers for an update to the growing season in Nebraska and Michigan. We'll also have market analysis with Matthew Bennett. Thanks for joining us. Have a great week.